How to avoid loss in crypto. Before starting, don't forget to like and subscribe to our channel for more future updates. So, let's start. Investing in cryptocurrencies can be volatile, and there is always a risk of financial loss. While it is impossible to completely eliminate the risk, there are several strategies you can consider to help minimize potential losses. Here are some tips. Educate yourself. Before investing in cryptocurrencies, thoroughly research and understand the market, technology, and the specific cryptocurrencies you plan to invest in. Stay updated with the latest news, trends, and regulatory developments. Diversify your portfolio. Avoid putting all your eggs in one basket. Diversify your investments across different cryptocurrencies, industries, and asset classes. This strategy helps reduce the impact of a single crypto's poor performance on your overall portfolio. Set realistic expectations. Crypto markets can be highly volatile, with rapid price fluctuations. Set realistic expectations for your investments and avoid chasing short-term gains or succumbing to fear of missing out, FOMO. Focus on long-term goals and invest accordingly. Use risk management tools. Consider implementing risk management tools like stop-loss orders, which automatically sell your assets if their price drops to a predetermined level. These tools can help limit your losses by mitigating the impact of sudden market downturns. Stay updated on security measures. Protect your investments by staying updated on security best practices. Use hardware wallets or secure software wallets to store your cryptocurrencies. Enable two-factor authentication, 2FA, on your exchange accounts and use unique, strong passwords. Regularly review and rebalance your portfolio. Periodically review your portfolio to assess its performance and make necessary adjustments. Rebalance your holdings by selling some assets that have performed well and reinvesting in others that have potential. Avoid emotional decision-making. Emotional decision-making can lead to impulsive actions that may result in losses. Do not panic sell during market downturns or make hasty investment decisions based on fear or greed. Stick to your investment strategy and remain rational. Stay cautious of scams and frauds. The crypto space is not immune to scams and fraudulent activities. Be wary of phishing attempts, Ponzi schemes, and suspicious investment opportunities promising unrealistic returns. Conduct due diligence and only invest in reputable projects. Consider dollar cost averaging, DCA. DCA is an investment strategy where you invest a fixed amount of money at regular intervals, regardless of the asset's price. This approach helps to average out the cost of your investments over time and reduces the risk of buying at the peak of a price cycle. Consult with professionals. If you are uncertain or lack experience in cryptocurrency investments, consider seeking advice from financial professionals or investment advisors who specialize in cryptocurrencies. They can provide valuable insights and help you make informed decisions. Remember that investing in cryptocurrencies carries risks, and there are no guarantees of profit. It's essential to do your own research and assess your risk tolerance before making any investment decisions. This is it for today's video. What do you think of our video? Feel free to share your thoughts in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.